Hello, and welcome back to my channel. In this video, I'm going to talk about 6 common myths about credit cards and what you can do to avoid falling for them. Credit cards are powerful tools that can help you build your credit history, earn rewards, and manage your cash flow. But they can also be confusing and misleading if you don't understand how they work. So let's bust some myths and learn some facts about credit cards. Myth number 6. You need to carry balance to build credit history. This is one of the most persistent and harmful myths about credit cards. Many people think that they need to keep a balance on their credit card and pay interest every month to show that they are using credit responsibly, but this is not true at all. In fact, carrying a balance can hurt your credit score and cost you money in interest fees. The truth is that you can build your credit history by paying your balance in full every month. This way, you avoid paying interest and you show that you can manage your debt well. Your credit score is based on several factors, such as your payment history, your credit utilization ratio, your credit mix, your length of credit history, and your new credit inquiries. Carrying a balance does not affect any of these factors positively, but paying on time and keeping your utilization low does. So, what should you do? Pay your balance in full every month by the due date. This will help you save money, avoid late fees and penalties, and improve your credit score over time. Myth number 5. Applying for a new credit card will hurt your credit score significantly. Another common myth is that applying for a new credit card will damage your credit score a lot. This is not entirely true either. Applying for a new credit card will have a temporary and minor impact on your credit score, but it can also have some benefits in the long run. When you apply for a new credit card, the lender will check your credit history. This request is called a hard pull or hard inquiry. A hard inquiry can lower your credit score by a few points, but it will only stay on your report for 2 years and it will only affect your score for 1 year. Moreover, if you apply for multiple cards within a short period of time, such as 14 days, they will be counted as one inquiry for scoring purposes. On the other hand, getting a new credit card can also help your credit score in 2 ways. First, it can increase your available credit limit, which can lower your credit utilization ratio, as long as you don't increase your spending. Second, it can diversify your credit mix, which can show that you can handle different types of credit. So, what should you do? Apply for a new credit card only when you need it and when you are confident that you can get approved. Don't apply for too many cards at once or too frequently. And use your new card wisely by paying on time and keeping your balance low. Myth number 4. Closing the cards you no longer use will help your credit score. Some people think that closing their old or unused credit cards will improve their credit score by simplifying their finances and reducing their temptation to overspend. But this is also a myth that can backfire on you. Closing a credit card account can hurt your credit score in 2 ways. First, it can reduce your available credit limit, which can increase your credit utilization ratio, especially if you have balances on other cards. Second, it can shorten your length of credit history, which can lower your average age of accounts, especially if the card is one of your oldest ones. The truth is that keeping an old or unused card open can help your credit score by maintaining your available credit limit and preserving your length of credit history. Of course, this assumes that you are not paying any annual fees or other charges on the card and that you are not using it irresponsibly. So, what should you do? Keep your old or unused cards open unless they are costing you money or causing you trouble. Use them occasionally to keep them active and prevent them from being closed by the issuer, and monitor them regularly for any fraudulent activity or errors. Myth number 3. Interest is charged right from the date of purchase. Many people assume that interest is charged on their purchases as soon as they make them with their credit card. But this is not how most credit cards work. Most credit cards offer a grace period, which is a period of time between the end of your billing cycle and the due date of your payment. During this grace period, you will not be charged any interest on your purchases if you pay your balance in full by the due date. However, there are some exceptions to this rule. First, if you carry a balance from the previous month, you will lose your grace period and you will be charged interest on your purchases from the day you make them. Second, if you make a cash advance or a balance transfer, you will not have a grace period and you will be charged interest from the day of the transaction. Third, if you have a promotional offer with a 0 APR, you will not be charged interest during the promotional period, but you may be charged interest on any remaining balance after the promotional period ends. So, what should you do? Pay your balance in full every month by the due date to avoid paying any interest and to enjoy your grace period. Avoid making cash advances or balance transfers unless you have a good reason and a plan to pay them off quickly. And read the fine print of any promotional offers to understand the terms and conditions. Myth number 2, you need to max out your credit card to earn rewards. The last myth I want to talk about is that you need to spend a lot of money on your credit card to earn rewards. This is not true, and it can be very dangerous for your finances. Credit card rewards are incentives that issuers offer to encourage you to use their cards. They can be in the form of cash back, points, miles, discounts, or other perks. But they are not free money. They come at a cost. The cost of credit card rewards is the interest and fees that you may pay if you don't pay your balance in full every month. If you carry a balance on your credit card, you will end up paying more in interest than what you earn in rewards. This will negate any benefit that you get from using your card. Moreover, if you max out your credit card, you will also hurt your credit score by increasing your credit utilization ratio and risking missing payments. The truth is that you can earn rewards without spending more than what you can afford or what you would normally spend with cash or debit. You just need to use your credit card strategically and responsibly. So, what should you do? Choose a credit card that offers rewards that match your spending habits and preferences. Use your credit card for your regular expenses and bills that you can pay off every month. Pay your balance in full every month by the due date to avoid paying any interest and fees. And don't chase rewards by spending more than what you need or what you have budgeted for. Myth number: credit card terms are non-negotiable. The last myth I want to bust today is that you have no say in the terms and conditions of your credit card. This is not true either. You can actually negotiate with your credit card issuer to get better rates, fees, limits, and benefits on your card. For example, you can ask for a lower interest rate, a higher credit limit, a waived annual fee, or a better rewards program. Of course, not every request will be granted, but it doesn't hurt to try. The key is to be polite, persistent, and prepared with some reasons why you deserve better terms. Those are 6 myths about credit cards and what to do about them. I hope this video was helpful and informative for you. If you liked it, please give it a thumbs up and subscribe to my channel for more videos like this. And if you have any questions or comments, please leave them below. Thank you for watching, and I'll see you in the next video.